So we were expecting the market to drop, but boy, did it drop a little further than we expected. What's going on, team? It's Ricky here with TechBud Solutions, here with a super quick stock market update. I wanted to share with you exactly why the market performed the way that it did. Now, we talked about it a little bit this morning. There were a series of economic reports that came in hotter than expected. And for some people, that's a little hard to understand. What do you mean hotter than expected? Well, there's a thing called ISM non-manufacturing index. And the thing that tells you is for overall production across the US, is it higher or lower than expected? Remember, the Federal Reserve. When I say we, I mean the Federal Reserve. The entire market is focused on one thing, and that is how the Federal Reserve will understand and make sense of these reports. And if these reports show that production levels are coming in higher than expected, meaning that production is higher, do you think that shows signs of a weaker economy or of a stronger economy? Remember, the Federal Reserve wants the economy to feel the pressure. They want production levels to be lower than expected. They want unemployment to be higher than expected. They want the economy to feel the pressure so inflation can come down. That's their focus. That is how the market reacts. So we say this thing within our Learn Plan Profit group, and it's good news is bad news right now, and bad news is good news. Now, if production levels actually came in lower than expected, expectation was 53.5%. The prior month was 54.4%. So anything below, anything at or below 53.5 probably would have caused the market to go up. But because it actually came in better than expected, production levels are actually higher, which means that, again, good news is bad news right now. Sorry. I get confused with it as well. It's a really backwards way of thinking, but I want you to understand why. Right now, the entire market is viewing behind the eye of the Federal Reserve. And I think that this article does a great job explaining that. A hotter than expected reading for the November ISM Manufacturing Index further fuel the concerns that the Federal Reserve will continue hiking after the index topped Dow Jones. So all that really is trying to say is last week, Jerome Powell spoke, and this is why the market went up last week. I like to keep things and make things very simple to understand. Last week, the market absolutely shot up. Why? Well, because Jerome Powell spoke and he said that as soon as December, based off of our last CPI data reading, which is our last inflation report, they can see them justifying a lower than expected interest rate hike. For those that are unaware, the Federal Reserve has been raising interest rates for the past 4 months, 0.75%. That's very aggressive. The only thing that the market wants is for the Federal Reserve to be less aggressive. And for the first time, Jerome Powell clearly said in his last statement, in his last paragraph, making sure that everyone is aware that it could be as soon as December because of the previous CPI data report and because of up and coming reports that it is possible that they can potentially only raise interest rates 0.5% instead of the 0.75%, meaning less aggressive. But when you get readings like this, right, that come in hotter than expected, that's not supporting signs of a slowdown, which means that therefore the Federal Reserve can justify being more aggressive or just as aggressive. That's the easiest way that I can simplify what's going on. So one of the things that, again, they try to kind of explain is following a speech last week by Fed Jerome Powell, markets quickly, right, and largely expect the central banks will approve a 0.5% interest rate hike. That will mark a step down from the series of 4 straight 0.75% interest rate, literally what we just said, right? And at the same time, again, one of the things that he did say within that speech, they just use very difficult to understand terms, right? And the vocabulary is always a little bit confusing. So all they're saying is, yes, Jerome Powell said it is possible that as soon as December, they can possibly be less aggressive, but they need to make sure that these reports and economic reports that continue to get released actually come in lower than expected. And not only just that, but they also are asking the question, well, how much longer can the Federal Reserve raise interest rates? And that's kind of the concern. It's okay, you're going to be less aggressive next month. That's a good thing. But for how much longer, right? Are you going to absolutely stop raising interest rates? That would be a good thing, hopefully sooner than expected. but what they're saying is they're nowhere close to where they want to be. So it's kind of the timeline, right? Every single month, normally, they tend to raise interest rates. At least they have for the past couple of months. So then now it's asking the question, not just how much, but for how long will you continue to raise interest rates? And reports like what was released today of coming in hotter than expected, not showing signs of a slowdown, are not supporting any form of slowing and or stopping interest rate hikes. So this is why the market reacted the way that it did. This is why I like explaining it, because I want you to understand why. Not that the market's rigged or that the market's against you. It's just at the end of the day, it's the market's reacting to whatever news was reported. Now this report was released probably, it was released like 30 minutes after the market opened. 15 to 30 minutes after the market opened, yet the market sold off continuously kind of throughout the entire day. But one of the things that I want to show you is that, if you kind of look at the day before, right, there's another economic report that was released on Friday of last week. Right, last week on Friday, there was an economic report that was released and the market aggressively sold off. But then guess what? It quickly recovered. Today, it did sell off to that same support range, but it did not quickly recover. So just something to be aware of. And if you look at this on the 1 hour time frame, we're still above the moving average, which is a good sign. But we'll see tomorrow. We'll see if we actually break below the moving average, which would be a great sign for bears and for people trying to short the market. Or if we show signs of a support here and we break above the EMA line, then we can work our way back up to that same resistance level of around 294, 295. But remember, that's been a very common resistance level. So no crazy money is set to be made being a bull as of right now, probably until the CPI data report that's going to be released next week. And that's going to be on December 13th. And then there's going to be an FOMC minutes meeting that's going to be on December 14th, if I'm not mistaken. So again, all of this is going to be kept up to date on my YouTube channel. And all you literally have to do is subscribe and drop a thumbs up on this video. So if you have any questions about what we talked about today, feel free to shoot me a direct message via Discord, and that's that first link in the description. I do trade live every single day, not once a week, not once a month, but every single day. So if you want to be able to watch me trade live, see my entries, see my exits, most importantly, hear my thought process on the why behind each trade. Again, stop guessing and start learning. Click that second link down below, learn a little bit more about our Learn Plan Profit Group and see if it's a good fit for you. And if so, I can see you for tomorrow's live trading session. Also, you might be wondering what's this behind me. We just kick-started our new TechBuds apparel giveaway. We're also giving away $2,000 cash and a brand new PS5. It just doesn't fit in this area just yet. But again, we just announced that if you want to learn more about the giveaway, it's going to be the fourth link in the description down below on how to enter. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.